Businesses that I help with or that I do consulting with, the business owners always come to me and be like, you know what, Gideon, I've been making a lot of money. I've done this, I've done that. But when I look in my bank account, it doesn't look like I was making money. It's always having zero. Guys, welcome to the channel. Thanks very much for watching. I'm back again with a very interesting topic this time. I'm going to talk about a question that a lot of people have always come to me asking about. Today, we are going to talk about what you should do to make sure that you have got a healthy bank balance. I'm going to define the difference between what we call in accounting cash flow versus what we call sales. So sales is when you have delivered goods to someone else, you've sold, the client have taken their goods, so that we can record it as you have made a sale. Whether the person has paid cash right away or the person is going to pay in the future, we call that a sale. So you have already made a sale. Now, cash flow, we are talking about what goes in and out of your bank account. So these are two different things. So the reason why I'm defining these two is because cash flow and sales, they do not usually happen at the same time. So it can happen that you have sold something to someone, but the money doesn't flow into your bank account right away. Maybe the person is going to pay in the future. So these are the two different things that we are going to talk about, as well as what are the factors within these two main items that can happen to lead you to have made a lot of sales but not seeing the money. First factor, and the most important one, that I've just mentioned as I was introducing this, is what we call the debtors. So debtors versus the payments. So what could happen is that you could be making sales, but these sales are people who are going to pay you in the future. So your bank account is not going to have any money, but your sales list is going to show that you've made a lot of sales during that period. So how do you as a business person manage this? So here as accountants, what we do is we've got what we call debtor's age analysis. The purpose of what we call a debtor's age analysis is for you to be able to see who owes you, and from when. So when you make a sale today, next week you'll be checking the list, the debtors list, and it should give you periods to say this sale was made in August, this was made in July, this was made in June. So once you have a list like that where you see the total amount here relates to June, the total amount here relates to August, the total amount here relates to September, but it has not been paid yet, at least you know now where to follow up, what to start with, which of your debtors, which are of your clients you need to follow up on, and which amounts. So debtors age analysis is very important if you are going to have a healthy bank balance. When you are a person who keeps stock, so some of the money that you make from your sales, you use it to also go and buy stock that you are going to be able to sell to clients. But here is the thing, guys. So when you buy this stock and then you keep it, it can only be expensed. It can only come in your income statements once you have sold that the items that you have bought, and then this is where we record it as a cost of the sales. So it will remain as an expense after you have sold the items. So the period when you buy some stock and then you keep it, waiting for it to be sold, that is when you can actually see that you don't have money. Most of your money is in stock, but the stock has not been realized, has not been sold yet. So here is the accountant's advice in this particular regard. So if you are a person who buys stock to resell, maybe you might need to have a look and analyze if you really need to buy as much stock as you have bought. So when you are buying stock, make sure you buy only the stock that you would like to buy and sell. So most of the companies are trying to run away from the element of buying a lot of stock and then their money is tied in stock. Then you don't have a lot of money to be running your business, or you don't have money in your bank account to the point that you can't even do other things because a lot of your money is tied in stock. The third point, it's about expenses. So you might have a lot of money coming in your bank account. You don't have a problem in collecting from your debtors. You are selling, the people pay you the money, comes and goes in your bank account, but it doesn't stay. Why? Because most of the time you are using also a large amount of money to pay for the things that you need to run your business. So here is the thing. If you are paying expenses, my advice is you need to have an analysis of looking at your expenses. Where is the large amount of your money going? Is it going to buying stock? Is it going to buy other expenses with regards to rent? Is it going to buying, paying for tax? All those things you can see. And once you know where your money is going, a large chunk of your money, where it is going, then you can be able to manage it. Say, for example, you can see that a lot of your money is going to rent. Perhaps you might start needing to look at a place which is slightly cheaper. Like, for example, if you don't really need to be in the city center, you can move out where rentals are a bit cheaper. If a lot of your money is going into stock, do you really need all that stock, or you need maybe to buy just a little bit for the certain period, and then once that stock is almost running out, then you go and buy some other stock. What about if your money is going to taxes, for example? Okay, here's the thing. If it is going to taxes, like for example, VAT, because VAT has got something to do with the sales that you are making. Maybe you sell quite a lot now, and then you use quite a lot of money on some other expenses, and then come the tax period or after the 2 months when you're supposed to file for VAT, and then you don't have money in the bank account. What should we do in such a situation? Okay, so in this situation, what you need to do is make sure that when you receive the money from the sales, 15% you were all actually collecting on behalf of the commissioner of the South African Revenue Services. So collect it, keep it separately. Have a separate bank account where you put the money that has got to do with tax. So 15% of whatever sales you are getting, you put it aside, just waiting for that tax period when you are going to be filing for the taxes. So, guys, these are the three main things that may cause you to have quite a lot of sales, but not seeing the money in your bank account. One of the last advice that I just wanted to give all the business owners, especially the small business owners, is that it is a good practice to keep an accounting software where you keep track of your expenses and what is going on with your business, because it helps you to manage all these things that I've just mentioned today without you having to struggle. Or otherwise, if you don't know how to use the accounting software, please get in touch with your accountant and he can be able to assist you. Please like, share, and subscribe. And thanks again for watching. Until